And let's start with the big story this evening. It's poised to be the largest M&A deal in the infra and material space. Adani Group will be buying 63% stake in Ambuja Cements and 4.48% in ACC Cements from the Holcim Group for a whopping $10.5 billion. Regulatory approvals are said to close by the second half of 2022, and the Holcim Group doesn't expect any due diligence complications. The Adani Group will also need to make an open offer for minority shareholders. Remember, the deal is valued at a 22% premium, which is why both the listed cement stocks traded higher today by about 3%. My colleague Mansi Dave joins in on what this means for the industry.
Suppose the biggest deal in the cement space, the ACC Ambuja deal, the brokerage houses have also started coming up with their reports, and we have CLSA reports as well as Phillip Capital reports on the deal. To start with, CLSA states the deal implies a net consideration per EBITDA of 11.5x and valuation of $196 per ton for Ambuja. However, Adani expects synergy with its existing businesses. Deal implies a mid to high single-digit ROCE and expects minimal price disruption as Adani and ACC already are at higher utilization. Any aggressive expansion plans could result in a derating of the sector is also what is mentioned in the CLSA report. However, valuations done at historically high EV per ton. So this is CLSA on the deal. However, Phillip Capital on Ambuja ACC deal states that Adani emerges as the second largest player in Indian cement industry. Of course, after Ultratech, now Adani will be the second largest player in the industry. Particularly becomes a direct and most importantly identify individual promoter controlled entities after this deal. The deal will potentially change the fortune of the sector for a betterment. Of course, this deal is considered to be a better one for the cement space altogether because a big player coming in this space is a good news in itself. Adani already has some expertise about cement business, and they also have people who have worked and dealt with MNC culture in the past. So this deal is a win-win situation for all of them. For ACC, they have maintained the buy rating, and the target has been increased from 2,550 to 2,850. However, Phillip Capital has upgraded Ambuja cement rating from neutral to buy, and the target price is also increased from 410 to 440 apiece.
All right. So what does it mean for the larger sector? Anil Singhvi, Executive Chairman, Shree Digvijay Cement, is joining us on the show. Mr. Singhvi, thank you so much for speaking with us this evening on the India development debate. First, your take for the space. It was a heated battle, a hotly contested acquisition. The Adanis have nosed ahead. Does it change things for the Indian cement sector significantly?
Thanks for having me, Tamanna. I think I would call it a defining moment for cement, as it was in 2004 and 5 when Ambuja and ACC got sold out to Holcim. But unfortunately, Holcim remained as a very passive and to a very large extent inoperative operator. So today when we have someone like Mr. Gautam-Adani, I think the space will look very different in the next 5-10 years' time.
What does it mean for ACC and Ambuja? We have reported today saying that the Adani Group may look at consolidating both of these holdings. We saw its stock prices going up, but do you think this will be a new lease of life for these two companies as well? What is the strategy going forward?
Definitely. I think there are a lot of low-hanging fruits, if I may use that term. I think operational efficiencies are still lagging. I think that whole animal spirit is not there in these companies. They've not expanded capacity. They've been sitting on a pile of cash, which is really not yielding any returns for the shareholders. So there are many things which Mr. Adani will be able to unleash. I think going forward, I expect two things. One is he's going to expand the capacity for sure from 70 to 100 and 120 going forward on that. And more importantly, use cash to have brownfield plants and use the currency, which is shares, because he will be, by the time the open offer ends, he'll be owning about 70-75%, depending upon what kind of response he gets in the open offer. But that will be the currency which he can use to acquire cement assets, mergers and all that. So I think the industry post JP, which was acquired by Ultra, and maybe to some extent Binani, hasn't seen a big bang consolidation in for last almost about 4 or 5 years. So next 2 or 3 years, I think there will be a lot of action. I always believe that what you saw the action in steel for the last 2-3 years because of IBC and a lot of stress assets and all that, I think the action is going to be in cement for next 2 years.
Kind of competition we will see in this space, Mr. Singhvi? Are you expecting a price war? Are you expecting, sort of a war for area, for, market share? And how would that play out? What would be the impact on the other big players right now?
Well, I don't expect any price war because today Ambuja and ACC all said and done are operating at a fairly high capacity utilization. So they don't have so much of latent capacity to really sell in the market. And secondly, unfortunately, industry is looking very well balanced. We don't have large capacity. So if the demand pops up, then definitely there'll be room for everyone to sell. So I don't expect any price war to get the market share. But going forward, what I expect is, as I mentioned to you, a consolidation again of the industry. There will be some more capacities which will get sold out. Ambuja and ACC for last 18 years that I've been watching have really gave so much of space or let so much of space to Ultratech, Dalmia and Shree Cement for them to expand capacities because they remained a very, very passive player. They almost had no acquisition appetite. They in fact sold Lafarge. When the merger took place, Lafarge sold is almost 10 million tons to Nirma. So in fact, they vacated the marketplace. So now I expect Mr. Adani to increase. In fact, Ambuja ACC, as we collect in 2005, had almost 25% of the market share. Now it's less than 12%. I'm sure in next 3 or 4 years' time, we'll go back to 20-25%.
So interesting times ahead for the space, but I want to ask you on the broader strategy. I think there's a lot of interest right now on what exactly the Adani Group's bigger plan is. We've seen them expanding rapidly into an infrastructure play. Some would say a pure play infrastructure kind of a strategy with ports, airports, distribution company, now in cement. Do you see a bigger picture, bigger plan here?
Coming from my own background of cement, I can tell you, Tamanna, that I think it's a very right strategy. He's investing into hard assets. He's investing into the assets those who are going to last for 100 years. Like cement plant, I can tell you the Digvijay Cement plant set up 70 years back, and today also I'm making 1,000 rupees EBITDA. So these are the plants which are, I would call it, built for generations. So he's building the assets which are not going to go out of fashion. He's building those assets which do not have, as of today at least, any kind of a challenge from technology. So he's building hardcore assets. As I often say, the one who has a port controls the city. I think he's going for those kind of things. Be it transmission, power, ports, airports, cement. I think it's unbeatable strategy. It's a huge leap of faith in India and Indian economy. He's playing on the domestic strength. He's not export oriented. So he's not going to suffer on account of ups and downs in the global market and GDP of the other countries. He's really banking upon India to grow at 7-8%. And these assets will be cash generating assets, almost like annuity assets for all the time to come.
All right. Thank you so much, Mr. Singhvi, for speaking with us. Always a pleasure to have you on the show. Mr. Singhvi calls this a defining moment for the cement sector and perhaps more consolidation to come. So definitely a space to watch. Now,